Alright guys, the main event is coming. The US-China meeting is looming and boy is it going to be spicy. There's a ton of mixed signals coming from the White House that's just making everyone go crazy. Now on one hand, Trump has signaled they won't unilaterally reduce tariffs on Beijing. And this is when China has said the US must lower them first to show sincerity. And obviously one side needs to give way first. While it's true that China is facing a profit squeeze and business is obviously down to the US, the United States is hurting as well. Now, container bookings from China to the US are collapsing. The plunge has been tremendous since April. Just 2 weeks ago, shipments have fallen by almost 50%. Retailers and companies, they're going to burn through their stockpiles and front loading done in Q1. There's tremendous pressure for Trump to work out a deal with China before it's too late. Now, the US is still hell bent on punishing the world with tariffs, which means punishing their own consumers. And we saw what happened with the trade deal with the UK. Now, while Trump makes it sound like a fantastic win, it's not really a slam dunk. Sure, there are some concessions. The US has potentially more access to sell farm goods into the British economy, but US consumers are still getting clobbered. The overall tariff rate on British goods have gone up from 3.4% to 10%. It's the exact same rate as the one on April the 2nd. The UK is only 3% of US trade, so the British lowering their own import taxes won't really move the needle in a big way. In addition to this, Lutnick just revealed what the final tariff rate for the US will be, and this puts it slightly below the smooth Hawley rate that made the Great Depression worse.
Factories, 2 points GDP. That's the President of the United States driving 3 points of GDP. And then, just like you said, if the average tariff rate for the world ends up being 15% on average, that's $450 billion a year. Now, Congress doesn't score that, because it's not their pen, it's the president's pen. But you know what's happening to our deficit, and you know what that's going to do to interest rates. It's going to drive them down, and we're going to deliver on Donald Trump's promise.
Now, this is quite crazy. Lutnick claims this will bring in $450 billion a year, but who pays for that? It won't really be the exporter. Secondly, will this bring interest rates down? I don't think so, but let's hold that thought for later. The message is still crystal clear. The plan is to reshore industries and reduce the trade deficit, which will be mainly driven by tariffs on global exports. Now, Trump is trying to deny the supply squeeze that's already here. However, there's only so much you can hide from reality. But what about China? The US is banking heavily on China to collapse, triggered by a decline in their export economy. Basically, all their factories shutting down. But the figures just don't support that hope. Exports from China to the world aren't crashing at all. While sales to the US have plunged by 21%, they are making more money than ever. Exports to the world jumped by 8.1% last month in US dollar terms. So revenue for China has increased in absolute terms. China's imports fell by only 0.2%. So Chinese exporters are making more money while their consumers are still staying resilient. And this is something we have said for over a month, and now the numbers have backed it up. When Trump imposed a universal tariff on the world, he essentially created a trade barrier for global exporters. And the easiest way to climb over it without eating the tariffs is to lower your cost of production. And where are all the inputs going to come from? It will be from China. Thanks to the supply chains, their products are extremely cost efficient. The numbers themselves reveal a lot. While shipments to the US have fallen by a huge amount, Chinese exports to the rest of the world has increased dramatically. To Southeast Asia, exports soared by more than 20%. The EU also bought 8% more Chinese goods in April versus the year before. Washington's tariff war is backfiring in real time. As a result, China's trade surplus is still at a record level of 96 billion. And if this continues for the rest of the year, we can expect the surplus to hit another $1 trillion in 2025. Now, Bessent has gone on record calling the current tariffs unsustainable for China. Or is he simply projecting? Because it seems the import taxes are unsustainable for the US. Besides countries buying cheap Chinese inputs, there might be another reason why China's exports are flying up. It's the same logic behind how Russia managed to dodge the oil sanctions. Chinese goods will simply flow through other countries and end up in the United States. It's hilarious, and there's no way to shut off this transshipment trade, and here's why.
Yes. So there's two issues at play there. The first one is China is engaged in one trade war. The US is engaged in 192. And so what that means is when China can't find willing buyers in the United States, it will naturally look elsewhere.
This is why Trump and Bessent are in panic mode. There's simply no incentive for countries to cut away their trade with China. Beijing is exporting deflation to the world so they can enjoy bigger margins for their own industrial production. At the very least, it will keep a lead on their own local inflation. Now, China is exporting deflation to the world while the US is actually importing in higher inflation thanks to their own tariffs. So the US is on the back foot here. The tariffs are raising prices for both American industries and the American consumer. So it's a double negative. It's a big reason why Trump is starting to do a U-turn, and he's doing it in a very obvious way. Trump is now hinting that he wants the tariffs on China to come down, and the number he just pulled out of a hat is 80%. Now, I have no idea how he came to that tariff rate, but here's the interesting part. The 80% tariff is up to Scott Bessent to decide. In other words, Trump just threw him under the bus. Donald needs a fall man to blame if the talks go haywire. It's sad and it's hilarious, it's funny all at the same time. But will this even change anything? A 80% tariff rate is as meaningless as the previous level of 145%. Now sure, some products around the fringes with the highest margins might be able to survive the new tariff rate, but most other products won't. And on a positive note, some tariff relief is better than nothing, I guess. I guess Trump is negotiating with himself and he just made a nice deal with himself. However, the US likely wants more concessions from China. The Trump team is looking for rare earths relief during the talks in Switzerland, and it makes sense. China has blocked rare earths that are used throughout critical US industries. Now, the US wants to make more magnets in their manufacturing, but it goes beyond that. China has cancelled their exports of minerals like gallium, germanium, and antimony. These are all essential raw materials in the EV sector and semiconductor industry. Even the US military relies a lot on Chinese rare earth supply and their metals, so it does make sense why Trump wants some relief here. But will China give the relief? I actually believe they would relent somewhat, but it's highly dependent on the US to lower their own tariff rate as well. It's a wait and see approach for the Chinese. And thanks to the export controls, China's rare earth sales to the world dropped by 16% to just 4,800 tons. That's a significant amount that probably came from China's ban on the US. That's probably where the drop came. There's still a huge amount of Chinese supply heading to other economies, but that raises prices for everyone since supply has gone down. It's even worse for the US. Now they have to pay an arm and a leg to convince countries to reroute their own supply to America. So those are the risks in the supply chain side of the equation. It's a big reason why Trump's trade war is an uphill battle and why he's now willing to compromise. Besides just the industrial reasons, US financial markets are already sounding the alarm bells. They are starting to buckle once again. It's a big reason why the White House is making all these preemptive concessions. Now, when the markets heard that Trump plans to lower the tariff rate on China to 80%, the S&P should have rallied to the moon, but instead, it's starting to trend lower, giving back the gains. Why? Because the Chinese responded by rebuffing the reciprocal tariffs altogether. Beijing told the world that they firmly oppose the trade war, and it seems that China's statement is having a bigger impact than what Trump just said, and now everyone is freaked out over the trade talks. This could take many months to conclude at the earliest. Stock prices are important. Now we have talked about the reverse wealth effect endlessly. People see their portfolios on fire, they feel poorer so they head out less, and obviously they spend less. Simple to understand. But there's another market that's even more important to the US economy. It's the bond market. Bessent needs to sell treasury bonds at a sustainable rate to fund the government without blowing up the national debt. Well, the latest debt auction results are out and it's an absolute disaster. Bessent just auctioned off $25 billion of long-term treasury debt. And this sale of 30-year bonds came in at a higher yield than expected. It sold at nearly 4.82%. And if we dissect who bought what, we can see a global drop in demand for US paper. Indirect demand, which is foreign demand, came in at below 59% when the 6-month average is around 64%. So we have a crash in foreign interests. Domestic buyers, they have to step in and soak up a bigger supply of the treasuries. They will demand a higher rate of return, and that's why yields went higher. It's crazy because this entire disaster is man-made thanks to the tariffs. It wasn't China or any other country that started a run on US bonds. It was the trade war itself. Even Bessent himself can't seem to admit that this entire situation is a disaster. He can't even answer who are the main payers of the tariffs imposed by the White House.
Who pays tariffs, Mr. Secretary?
Sorry, well...
Who pays tariffs?
Sorry,
Mr. Secretary, please.
Excuse me.
Look, is very simply, who pays tariffs, Mr. Chairman? I'd like him to answer that question.
Well,
He wants to answer other questions.
well, Congressman, if the if the exporters they dislike tariffs so much, why wouldn't they? If I think what you're trying to get me to say,
Did you remember the question? I'm not sure you did. Who pays tariffs?
that it's a very complicated question.
Reclaiming my time. People pay tariffs.
Is this lack of awareness that's freaking out investors, both domestic and foreign? If Bessent can't even articulate who pays the tariffs, either he's truly clueless or he's waffling about in his strategy. It's no surprise why bond yields are starting to rise throughout the yield curve, especially on the longer end. The 10-year has rebounded up and is testing 4.4%. Meanwhile, the 30-year has broken 4.83%, which is not good. Trump wants lower rates, but the Fed isn't cutting and investors, they don't believe the trade deals. The main event, which is the China talks, might just crash and burn during the weekend. So is Bessent really going to play hardball or relent? And even if it drops to 80%, it's still 80%. It's quite clear that we are moving towards an endgame scenario of a 10% tariff on everyone, while China takes an 80% tariff, maybe a little lower, and that brings us back to Trump's pre-election plan. But that won't end the flow of goods from China to the US. It will go through other countries either as raw materials and inputs or as a transshipment. Now, exports to the US from Southeast Asia have been climbing, especially from Vietnam. In March and April, Vietnam imported in $30 billion worth of Chinese goods, and in the same 2 months, their exports to the US flew to the moon. So the US is still getting Chinese products or Chinese inputs, just in an indirect way. And here's the crazy thing, that's gonna be the best case scenario. There will be higher tariffs on China, the decoupling will continue, the only question is how high the final figure will be. And just listen to Lutnick, he has reviewed the game plan and what Scott Bessent is gonna do. There will be no pause, just a discussion of the number.
Is there a strong chance that the current tariffs will be completely paused after this weekend's talks?
No chance. No chance. No way. No way.
But the 145 stay in place, or is it moved down to what we heard today?
No. They come down to a human level, right? To a level where we do business. But 145% is decoupling. Let's not do business with each other. Let's bring it down to a level that he studied and he knows, right? Where did we come out with on Liberation Day? 34% is where it came out on Liberation Day. That's the studied number that Donald Trump did then. He may put it up higher, but that's kind of the idea, 34%. And that's a number you should look at. And somewhere around there, maybe a little higher, maybe a little lower, Donald Trump will make the deal with the Chinese to de-escalate. And then we'll go forward from there, making deals with everyone in the world. Then we'll sit down with China and try to work out the right deal for America with China.
So there's a chance of tariffs to drop down to 34%, which means additional pressure on Scott Bessent to sign the deal. And it's quite bizarre, shouldn't it be Lutnick talking with the Chinese? Either way, we wish Bessent the best of luck. Hopefully he can bring the tariff down to a human level before everyone around us just collapses. But let me know what you think. How will the talks go in Switzerland? Will we get a good deal or nothing burger? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.